Minister Datuk Seri Najib says, forget the scandals, forget the mudslinging. The Tun Razak Exchange and Bandar Malaysia will be 1MDB's real legacy. Speaking at Invest Malaysia, PM Najib said the two would emerge as vibrant new centres for KL. He said, in years to come, they will be the real legacy of 1MDB. They will be what are remembered. He also said that 1MDB's rationalisation was working following its debt repayment, which includes a 950 million ringgit standby credit facility from the government. More on 1MDB, the Office of the Attorney General of Switzerland has elements in hand to suspect the money paid for the guarantee of bonds issued to fund 1MDB's power plants have benefited two public officials and a company related to the motion picture industry. In its statement, the OAG said it had reasons to suspect that the money was not returned to the Abu Dhabi sovereign fund that supported the commercial risk. Originally, the bonds had been issued to finance investments in those electric power plants, but somewhere along the way, the OAG said the funds were suspected to have benefited other parties. OEG said it had expanded its criminal investigation into 1MDB to include two former Emirati officials in charge of Abu Dhabi sovereign funds. It also sent two mutual legal assistance requests to Luxembourg and Singapore. The phrase, if at first you don't succeed, seems to be the motto for Bank Muamalat. Apparently, an unrealised merger between Bank Muamalat and Malaysia Building Society Berhad could result in the Islamic Bank being listed in order to add value. Its CEO said, the market is not right for listing at the moment, but when the market turns, we will look at more alternatives for the shareholders. 70% owned by DRB-Hicom Berhad, the conglomerate had been attempting for years to toe the line set by Bank Negara to trim its stake in the Islamic Bank to 40%. Keep in mind, there have been no shortage of plans, including a merger with Affin Holdings and MBSB, which did not pan out. Bank Muamalat's other major shareholder, Khazanah Nasional Berhad, is apparently also looking to dispose of its stake in the bank. Jack Ma's Alibaba continues its march to world domination in the online shopping space. It has offered US $1 billion for control of Lazada Group SA in an effort to expand from China's mighty bosoms to Southeast Asia's newer, perkier ones. Alibaba will pay US $500 million for new stock in Lazada, as well as purchase stakes from some of its existing shareholders. Those in Lazada looking to dispose of their stakes include Rocket Internet SE, Tesco PLC, and Investment Abbey Kinnevik. This deal helps to move forward Ma's vision to have at least half of Alibaba's revenue come from overseas. Lazada operates in Indonesia, Malaysia, the Philippines, Singapore, Thailand, and Vietnam. Interestingly, Japanese rival Rakuten had earlier this year shuttered its Southeast Asian offices in Singapore, Malaysia, and Indonesia as it chose to focus its efforts back home. Time to tentatively break out the champagne, people. Oil has reached a 2016 high of US 43 per barrel. The rise is actually underpinned by hopes that an upcoming meeting between the oil producers will actually help put in place steps to tackle the current oil glut. US Brent crude had hit a high of USD 43.53 during trading. Members of OPEC as well as outside producers will meet at Doha on Sunday to discuss freezing output in order to stem the oil skid. Other factors that piqued enthusiasm included stronger vehicle sales in China, which is of course an indication of strong gasoline demand. Cheap oil has proven a headache for oil-producing countries, including Malaysia, which have seen their revenues take significant hits as a result.